What's going on, everyone? My name's Obi and welcome back to Courtside Financial. Today I'm talking about something that's been going on in the Chinese EV market that tells us everything about where the industry is headed. Now, I'll be straight up with you. I'm bullish on Nio as I always have been, but what we're about to talk about today has nothing to do with being bullish or bearish. It's about survival, and when survival becomes the priority, everything changes. So here's what happened. Nio, Xpeng, and Li Auto, the trinity that we've been watching as they've grown from scrappy startups into legitimate automakers, just collectively threw in the towel on premium pricing. All three of them, within weeks of each other, slashed prices so aggressively that it made my head spin. Let me give you the numbers because they're wild. We'll start with Nio's nuclear option. On August 29th at the Chengdu Auto Show, Nio announced that all NT 2.0 platform models will get a 100 kilowatt hour battery as a standard. That's a 38,000 yuan price cut overnight. But here's the kicker. The new ES8 starting at 416,800 Ren or just 308,000 Ren with battery as a service. We're talking about a vehicle that used to command over 500,000 Ren, now competing in the 300k range. Li Auto had a reality check as well. The i8 that launched at 349,800 Ren, that lasted exactly 1 week. Then it dropped to 339,800 Ren with 20,000 Ren worth of free upgrade. Li Zhang himself admitted that they fell into inertia with their pricing structure. Then we've got to talk about Xpeng's race to the bottom. The P7 now starts at 219,800 Ren. Remember when the original P7 top trim sold for 400,000 Ren? And don't get me started on the Mona MO3 at 110,000 to 140,000 Ren, directly competing with BYD and Geely. Now, some of you might be thinking, Obi, why would I care about Chinese EV pricing if I'm not invested in any of these companies? Here's why this is bigger than companies just having a bad quarter. This is what market maturation looks like when it happens at warp speed. The Chinese EV market is showing us the future of global competition, and it's brutal. When Huawei drops the Hongmeng lineup spanning hundreds of thousands to over 1 million Ren, when Xiaomi pre-sells hundreds of thousands of vehicles with just 2 models, when Tesla's Model Y keeps selling despite skepticism, you're seeing resources concentrate at the top. The Matthew effect is in full swing. The rich get richer and everyone else fights for the scraps. Speaking of Xiaomi, let's talk about what winning looks like in this environment. Li Jun's company hit over 30,000 deliveries and raised their annual delivery target from 350,000 to 420,000 vehicles. Sounds great, right? But here's what's really happening behind those numbers. Customers are finding test car labels on their windshield, electrostatic residue from quality control stickers. Multiple customers got charged the full payment before delivery only to have their vehicles sold to someone else. We're talking about selling one car twice becoming a meme. The YU7 has a 57-week delivery timeline. Think about that. Over a year to get your car, and yet demand stays strong because the fundamentals are solid. 835 kilometer range, 800 volt architecture, 81% highway efficiency at minus 10 degrees. This tells you something crucial. In a survival market, operational excellence becomes just as important as product excellence. Now let me put my Nio bull hat on for a moment, but with clear eyes. When I look at what Li Bin told us last week, calling the ES8 an anchor model that will reset their whole pricing architecture, I see strategy, not desperation. The first gen ES8 was their anchor. The second gen deviated and cost too much. Now they're back to fundamentals. Their 100 kilowatt hour battery wasn't just a price cut. It was positioning for this new anchor. But let's be honest about the cost. Existing owners have to feel backstabbed. The company literally said if we don't cut prices across the lineup this year, we face certain death. That's not strategy speak, that's survival speak. Li Auto presents the most interesting case study right now. They're still profitable. 11 consecutive quarters of profitability while reducing R&D spend by 12.4% and marketing by 9.4%. They're managing costs like a mature company, but their Q3 guidance, 90 to 95,000 vehicles, down 37 to 41% year over year. With 28,500 deliveries in August, they need the i6 to absolutely nail it in September to hit guidance. Li Zhang's mid-year comment hit me. Every time we play a card, our peers play it twice. That's the sound of a CEO who understands the game has changed. What we're witnessing isn't just about 3 companies. This is the entire industry watching companies like Tesla, BYD, and the newcomers like Huawei and Xiaomi demonstrate what happens when you either have massive scale or massive ecosystem advantages. Traditional joint ventures are back with some serious money. New entrants are arriving with different playbooks. The original new forces, they're getting squeezed from above and below. The price war isn't strategy. It's a symptom. These companies are trading margin for time, hoping to survive long enough to build the scale and technology moats for the next phase. Here's my take as someone who's been watching the EV industry closely. We're in the consolidation phase. Not everyone survives this. The companies that do though, they'll emerge stronger, but they'll certainly look different than they do today. For Nio specifically, the Anchor model makes sense if, and this is a big if by the way, they can execute on volume while maintaining quality and brand perception. The battery as a service model clearly gives them flexibility that others don't have. For the broader market, watch who can scale efficiently while maintaining innovation at pace. Watch who builds the best charging infrastructure, the most compelling AI features, the strongest international expansion. The Chinese EV market is giving us a masterclass in creative destruction in real time. These price cuts aren't the end of this story. They're just the beginning of a new chapter. The question isn't whether Nio, Li Auto, or Xpeng will survive this phase. The question is, what will they look like on the other side? And whether they can build sustainable competitive advantages beyond just making good cars. Because in a world where everyone can make a decent EV, being decent isn't good enough anymore. That's it for this episode of the Courtside Financial Podcast. Remember, we don't just talk about the delivery numbers, we talk about what those numbers really mean for the future of this industry. Anyways, that's going to be it for this episode. I hope you found it useful, entertaining, at the very least. If found it to be informative or any of these things, make sure you hit the like button, click the notification bell icon, subscribe, share the video. All this stuff really does go a long way in helping out the channel, helping us to reach a broader audience, and ultimately serve more people. So we'll see you in the next episode. Happy Monday. This is Obi signing off. Goodbye.